Dan, the jobs number was disappointing, but it's perhaps not unexpected to see a little bit of tempering, at least for the time being. Does it change the thesis for the bull run in the markets?
Not really, and it definitely keeps the Federal Reserve at bay, because I think they're going to really keep liquidity ample in the market environment right now. Clearly, there was a dramatic shift in policy early in 2019, and where we are today, I just think the next move might be down, not up, if there's any continued weakness in the overall economy.
So if the Fed stands ready, then how far could the market actually fall? I mean, how much of a pullback would you really expect to see before people just come right back in and buy dips the way that they have for the better part of 3 or 4 years now?
I think the issue, there are some issues when you think about Boeing, for example, that is going to temper GDP growth this year, but at some point, Boeing's going to get its act together, and that will be a major impediment. But think about in the fourth quarter what's happened. We got bilateral trade deals between Mexico and Canada. We made a trade deal with China, or at least a phase 1 deal, and there's at least now a clear path on Brexit. All these things were overhangs on the market right now, certainly from a psychology standpoint. So I think the psychology is extremely important here, particularly when you look at capital investment, because you have all of the ingredients in place for a CapEx cycle, a tax policy that's very pro-investment, and other factors.
So we've focused so much on macro for such a good while because it has been the headline driver.
That's right.
We now turn towards the micro because earnings season kicks off. Many traders and investors say that earnings really are the driver behind the market. So what do you expect from this earnings season? We already know the consensus is for a drop by more than 0.5% in earnings year over year.
And the consensus has usually been overly pessimistic, and I would anticipate that that will be the same. What we don't realize is how adaptable corporations are to the environments that they're in, because they have to be. So, at the other end, in terms of interest rates, we're also seeing steepening yield curves, not just in the United States, but that's begun to go global too, as we've seen both the German and French yield curves also.
So I'm glad you brought that up, because the yield curve will be a huge focus for traders and investors because of the bank earnings this week. They had a banner year in 2019. Does that continue in 2020 for the banks?
Well, you mentioned valuation. There's a lot of valuation support in the banks, and the consumer is in extremely good shape. The balance sheet of the consumer is in extremely good shape. And, we'll see how things go, but I would anticipate profits will be quite good at banks. All the money center banks should do quite well.